watch the CPI number. When that drops below 6.6%, it could start a huge market rally, because last time that happened was in August of 1982. It started a 10-month rally. When it dipped below that number, the market participants said, hey, the Fed's finally got inflation licked. And that 10-month rally led to a 100% increase in the NASDAQ back then, 110% increase in the Russell, a 70% increase in the S&P 500. So yeah, unlike a lot of market strategists that come on the network and are hesitant and nervous and say sell the rally, we could be in month one of what could be a 10-month rally ahead of us this year, which nobody's expecting.
Because they say, well, it's just a reversion to the mean. It's a lot of short covering. It's totally speculative. I mean, look at Bitcoin, right? You think the bounce in Bitcoin is legit, for example? I ask you almost, rhetorically. So they suggest that this is all early year action and it's sure to fade. How do you respond to that?
Look, consensus is usually wrong. I mean, nobody thought anything was really going to come out of Jackson Hole. It ended up being this huge negative catalyst for the market. Everybody coming into the Fed last week said it's going to be another Jackson Hole drubbing on the head of the market. And it was just the opposite. NASDAQ was up 3.3% for the week. Dow was negative for the week. So consensus has a poor track record over time. A lot of people obviously coming into this year were leaning on one side of the boat, and we are just getting the opposite. Now, last year they can point to the June rally to the, early August, and that got faded, and they think that's going to happen again. History doesn't always just repeat itself. This could be the start of something much, much bigger.
What happens if Powell tomorrow is a little more hawkish now to try and bring the train back into the middle, so to speak? Doesn't that have the possibility of, if what's going to happen, right? If rates move up in any meaningful way, those stocks aren't going to be higher.
Well, Powell was a ball and chain on me and a lot of investors in 2022. Me looking at tech stocks in particular, almost didn't matter what these companies did fundamentally. It was just Powell was constantly coming down and raining on everyone's parade. I'm feeling positive going into this year, and even before last week's meeting, but definitely coming off the heels of last week's meeting, that it really doesn't matter what Powell says anymore this year, or other Fed heads. Of course, they have to keep talking down things, but the market is looking ahead. There has been enough pain, especially in tech land, where multiples have contracted so much over the last 2 years. I don't know what people who say, tech is still expensive are looking at. They're not looking at the same stocks I am. A lot of stocks are back to 2017 levels. A lot of SaaS stocks are back to like 2014 levels. So I think enough work has been done in taking the air out of those stocks where we can have a meaningful rally, and it can continue this year.
So of the ones that we mentioned, Coinbase, Shopify, Tesla, Uber, which do you have the most excitement around over, let's call it, the next couple of months?
I think Coinbase is still underappreciated, even up 100% this year, because this thing is still cheaper on an EV to revenue basis than Charles Schwab. It's the dominant, crypto market exchange. They're going to have likely 120 million verified users by the middle of this year. They're one of their big competitors imploded a few months back, FTX. They got the dominant part of that market share, which the market really didn't price in. Also, I'll point out that Toby Lutke, who's the founder CEO of Shopify, is on the board of Coinbase. He bought $3 million worth of Coinbase stock on the open market himself in December, January at an average price of 38. If this thing, goes back to not 2021 levels, but in terms of ARPU, for their bigger user base now, back to 2020 levels, and it gets a premium to a Schwab type multiple, this could be a $300 stock before the end of the year.